David, thank you so much for taking the time. It's wonderful to speak with you again. And after a pretty robust looking quarter for Alcon, the eye market, clearly eye care took a hit during COVID, but it looks as though things are well on their way to recovering. How would you describe overall market dynamics right now?
Well, we were very pleased with the fourth quarter. Obviously, we grew double digits in both our businesses for the first time. So that was an exciting rebound. But I think probably the story is the international markets for us. The United States had very strong markets and had returned to kind of 2019 growth rates earlier in the year. I think we were a little bit concerned about the pace of the international growth, but Europe has done quite well for us. Japan's still a little bit slow, but directionally, our contact lens business, for example, grew low single digits in the market, and we grew a good bit faster than that. But I think internationally, the story is pretty solid fourth quarter, and so I think we're positive about what's going to happen this year.
How long before even those international markets return to pre-pandemic levels?
Well, I think we're kind of there now. I mean, in our surgical business, maybe not quite, because India is quite a large market in terms of volumes. Now we under index there, so we have typically excluded it from the rebound just because it doesn't give you quite a fair sense of where we would be. But if you include it, it's about a minus 2 or 3% off of the 2019 levels. But if you exclude it, again, we're kind of in that low single digit growth on 2019 in the fourth quarter. So we've kind of gotten ourselves back to the fourth quarter, and now I think we expect to grow all this year over the fourth quarter, kind of all in both businesses.
Let's talk a little bit more about the outlook for 2022. Last year, you withdrew your guidance because simply you didn't have the visibility like many businesses around the world. But this time around, you have given the market some insight into what you're thinking for the year ahead. So detail for us what you're thinking in terms of growth and also margin.
Yeah, so we're pleased with the market progress we've made, and so we expect kind of markets to return to what I'd loosely call historical growth rates, which is kind of a mid-single-digit number in both of our businesses. For us, if we grow a little faster than that, we expect top-line revenue to grow in that 7 to 9% range. So we feel very good about our product flow. We feel very good about the full-year effects of products that we basically got into the market, the back half of last year. So we see pretty good market recovery and good positive momentum from products that are being launched now or just have been launched late last year. And then if you think forward on core operating income, our thesis from the beginning has been grow that top line with product flow and keep that moving so that we can get operating leverage down to the bottom line. So we expect to see a good bit of operating leverage this year. We've guided somewhere between 18 and 19% core operating income for the full year, and I think that's great progress towards our long-term goals.
How much flexibility do you have, David, on spend, in terms of cost to run the business, but also R&D? You must have had to flex those quite a bit over the last couple of years.
Well, interesting enough, Julianna, we really laid off of the R&D organization. We kept our spending through this period, and I know that was somewhat disconcerting to some, but I think we have kind of shown now that it really does pay off. I mean, we kept the funds moving. Our R&D percentage to sales went way high in 20 as set revenue came down, but we kept the absolute value in all of our programs moving. I mean, it was hard enough to keep them moving with the COVID, processes. So clinical trials slowed, some of our testing slowed, but it was really critical to us to keep that long-term pipeline alive and the belief that we could keep generating products like we have for this last several years to maintain the hypothesis that, look, this is how we're going to grow. It's product flow, it's innovation, and it's top line growth driving the bottom line leverage. So that part of our cost structure, we never laid off of. And it's really just now that as revenue comes back, we're still growing R&D, but as a percentage, it's coming down. Similarly, I think on our sales force and our marketing costs, we did take those down everywhere we could in a variable way, but we really didn't touch any of the hard infrastructure. So we kept everybody employed. We kept everybody moving with the belief that this would be, there would be a time that we would want all of that resource back. And of course, that time seems to be this year. So we're pleased that we did that. But again, I think we did the responsible thing, and we took out, I think, $200 million in the second quarter of 20, as I recall. So, lots of good discipline around the variable costs. We've kept the right messaging around innovation and investment in innovation.
How are you doing on the staffing front? Are you finding it difficult to retain and acquire staff in any of your key regions?
Well, we do. I mean, particularly in the manufacturing world, I think wage inflation is real, turnover is real, and I think that's not unusual for anybody. I think we have a unique proposition at Alcon. Our employees really enjoy the kind of work we do, which is helping people see brilliantly, as we always say. But that kind of mission and purpose, I think, really does engage employees, and so our turnover is a little lower than most, but it's a real situation that we talk about and we're working on.
And inflation more broadly, it's obviously the dominant theme in markets right now. How is it impacting your business and poised to impact it in the months ahead?
Yeah, well, we saw inflation, like everybody did, start really run up in the late third quarter. We had a little bit of an effect in the fourth quarter. We see it continuing really through the middle of this year. And as it wraps around, I think the back half, our assumption is that it will attenuate a little bit in the back half of the year. But we're dealing with it like everybody else. We're working hard to create productivity initiatives in our manufacturing areas. We've taken some price increase, where we can, in our contact lens business, for example. And then we're doing as much as we can to work with suppliers to maintain continuity of supply, number one, which is our primary objective, but then really begin to look at how can we drive costs down over time. So we're working with all of those issues to try and bring our gross margins, keep them as robust as we can.
And on the supply chain front, are you facing any outstanding bottlenecks or supply chain issues you'd want to flag?
Well, not really. I would tell you we're hand to mouth in lots of areas and lots of components, but we've been very successful, I think, in early on getting enough raw material that we bought in advance, and held a little bit more, raw material and WIP than we would normally in our inventory. But I think directionally, it's getting expensive to do it. So really, we've been able to maintain continuity of supply at a little bit of the cost of inflation. Because those parts and raw materials are actually going up, and we've had to pay. Chips, for example. We don't use a lot of them, but they're in all of our phaco machines, and they're expensive. And if you want them, you could probably get them, but you're paying way over the odds for them.
And just lastly, on the growth outlook and where you see the biggest opportunity, you've clearly said you've kept up R&D spend. Where is the focus? Where are the key growth areas you're going to be putting your energy into over the coming period?
Yeah. Well, look, we're looking at everything that is, an eye disorder. And I think what we see is, things like nearsightedness, myopia. If you look at the number of people over the next, 20 years that are going to be myopic, in 2050, half of the world, literally half the world, will be myopic. And so we look at refractive surgery, we look at visual correction, we look at anything that can adapt the cornea to correct for nearsightedness, as a really big opportunity, because the sheer number of people who are going to need some kind of correction is going to be in our favor. And importantly, it's a malady that kids are particularly afflicted with. So there's a lot of work going on how do companies like ours help kids slow the progression of myopia. Big area for us. Similarly, we've gotten back into glaucoma recently, and glaucoma, 70 million people go blind from glaucoma. This is a big deal. We are involved in a number of development projects that, get people out of drops where you have to take 2 or 3 drops every day, sometimes twice or 3 times a day, to maintain and just kind of slow down the process of going blind with glaucoma. And so we're working on either better medications or maybe, interestingly, procedures that could change the course of the glaucoma disorder. And so we just made an acquisition of a company that does that, but we continue to look for the next best thing that really could change and alter the course of that therapy. So all things that look like that, and if it's an eye care, we're looking at it. So, anything we can do to keep people's visual acuity sharp for as long as possible, that's our business.